crypto markets stabilize along with stocks on hopes of less severe tariffs and a slightly more dovish message from the Fed last week. Implied vols continue to collapse and short-term skew neutralizes, suggesting more balanced risk going forward. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larka from Options Insight, and this week we've got another one of our panel discussions. But instead of Dave being my co-host like he normally is, we thought we'd put him on the panel because the topic is very much in his wheelhouse. So the topic of debate today is Bitcoin as a safe haven. Is it still an inflation hedge, or is it just another risk asset with high correlation to stocks? Now, my other two panel members are from Talos and from Amina Bank. But lads, why don't you introduce yourselves so I don't mess up your names?
Thanks, Imran, for inviting me again. My name is Ehlert. I'm the deputy head of derivatives trading at Amina Bank. Launched in 2018, headquartered in the beautiful center of Zug, Switzerland. And we have several other licensed hubs around the world, in Hong Kong, in Abu Dhabi, and in Singapore. We offer a seamless and safe, secure way and bridge between traditional and digital assets. So we are a regulated Swiss bank with a focus on crypto. And by that, I mean, we offer spot trading, derivatives trading, obviously, daily banking service for our clients, and they can tap into staking services, lending business, all these sorts of things, all packed and wrapped into one bank.
Cool. And Andrew?
Great. Thanks again for inviting me. My name's Andrew Theodosiou. I work for Talos. So Talos is the largest provider of trading technology to the institutional space in crypto today. Our clients are the biggest banks, hedge funds, brokers transacting in digital assets. So the platforms are sort of one-stop shop for any institution that is trading. So execution, risk management, customer management, anything you need to do in crypto basically can be done on the platform. I'm director of sales for EMEA, and that truly is EMEA. Europe, Middle East, Africa. I'm sure we'll cover a lot of that in the macro piece of the chat. But we're headquartered in New York, offices in New York, London, Singapore, and clients around the world.
Cool. Welcome to the show, guys. All right, so let's get into the discussion. So we're talking about Bitcoin as an inflation hedge. So who wants to kick off with that one? Dave, should we start with you?
Yeah. Well, I mean, I've always thought of Bitcoin more like from the currency debasement angle. So for me, it's more of a currency debasement hedge.
So what's the difference between?
Hedge. Now, but inflation is a form of debasement, right? So the value of your currency being, and the goods that it can buy being worth less tomorrow than it is today. So I guess you could argue that it's a very similar thing. I think the currency debasement is normally a much bigger kind of asset inflationary phenomenon. We think of inflation as this really narrow basket of goods where, it's 3% or whatever. But actually, when you think of the real inflation, the things that really matter to people, things like housing, even being able to purchase stocks and things like that, we've had just like astronomical asset inflation really since the financial crisis in 2008 when they started running the money printers. So I think, I still think Bitcoin is like the ultimate hedge against that. It's the ultimate kind of hard asset to hedge against that. And it's done a pretty good job, a very good job, over time with that. So I kind of, in thinking of currency debasement terms, Bitcoin outperforms, when we're in the currency debasement game, i.e. running the money printers and all that. So, and I also think of Bitcoin as being the ultimate hedge against like failure of fiat systems, central banks and even governments kind of losing control of what they're doing. Now that comes in again in the moments where they're either running huge deficits or central banks are printing money and having to do all these kind of liquidity provision tools that are essentially artificially inflating the assets in the system, which I'm still of the view that the fiat system in debt-based economies, and particularly economies carrying lots of debt, as we are in the West, can't survive without ever more liquidity provision and this artificial inflation of assets. And we see it time and time again, right? As soon as, whether you want to look back to the regional bank crisis, what was that, in 23, when we had those issues, and straight away the Fed come out and within 2 weeks, they've ramped up the balance sheet 400 billion, and they're supporting that market. Or whether we look at the episode we had in the gilt market here in the UK, again, even though we're in a hiking cycle, Bank of England can come out and they go print money. They're the environments when Bitcoin performs particularly well. But again, it's a currency debasement hedge. It's a hedge against almost that failure of the fiat system. But actually, you are hedging against this massive kind of asset price inflation that it drives. However, on kind of the more goods inflation, I still think over time it's doing its job there as well. I think it's all about timeframes. So I think people, when they kind of debate whether it's acting as a good hedge, it's because we get a strong inflation print. Then everyone kind of then goes into the central bank are going to hike rates. Bitcoin comes off, and everyone goes, well, inflation's high, and Bitcoin's coming off. But it's something we can get into around that. But I also, and I'd like to get these guys' thoughts first. But I also think there's an element of we still have enough credibility with central banks in terms of knowing that the Fed are going to hike rates and then actually send inflation the other way, that maybe Bitcoin actually front runs like a tighter policy that actually credibly brings inflation down. So I kind of wonder whether Bitcoin takes a lead on the direction of inflation, i.e. in 22, when we had a really massive run up in Bitcoin, through 2020, 21, and then the Fed come out and say get quite aggressive on hiking rates, have like the kind of fastest, arguably the sharpest hiking cycle in history. Bitcoin absolutely dumps, and subsequently we saw inflation come off from 10% highs back down towards 3% or have you. Mm-hmm. So was Bitcoin front running the disinflationary sort of path that we were about to enter
because we were attacking inflation?
Yeah, so I think there's an argument to say maybe we front run it, but for me it's a currency debasement hedge more than it is an inflation hedge, even though there's a kind of blurred line, I guess, between currency debasement and inflation.
What do you think, guys?
Yeah, I think there's actually many interesting points touched upon there. One of them was about this trust in government and central banks, and linking that to CPI as well. I think you can make the argument that CPI hasn't been accurately representative of true inflation. So if you take a true look at what inflation actually is, which incorporates all the other elements that you talk about, housing, stocks, commodities, the true inflation experienced by actual people is a lot higher than what we may see on the CPI print, and it's that which Bitcoin is highly correlated to. So yeah, to your point about it being a longer term, wider liquidity hedge, I think the argument can very strongly be made there. To your point about the short-term sort of price movements, there's probably still too many speculative players or other flows in Bitcoin that impact the price that make it probably less of an effective short-term hedge.
Yeah, I mean, I would generally agree with the fact that there must be, just by definition, it's limited supply, comparable to gold. So there must be some sort of hedging effect against inflation. However, we're also looking at an asset that has a vol of like 60-70%. Is that an accurate hedge against inflation? Or what about TIPS, like Treasury inflation protected securities? What about bonds or gold? Much lower vol in these assets. And they're also usually hedging you against inflation. So by just looking at the use case, I think if you look at emerging markets like Turkey, like a current case, or Argentina, where you have hyperinflation and the currency is like denominating very sharply, I think the Bitcoin serves much better in these economies as an inflation hedge than it does for economies in Europe, USA, whatsoever. There, I think it's more seen as a risk asset that is not 100% correlated with stocks, etc. It decorrelates every now and then, so it has some sort of diversification effect. But in a nutshell, I think as a pure inflation hedge, I would rather say it fits more into the economies that also face currency debasement with a similar vol that we have in Bitcoin, for example.
I think that's a great point about the vol, because that's right. You know, when you think of a hedge, do you really want a hedge that moves on a 60 vol? Ideally not, right? So if you're in developed markets, why would you not just use gold for that, right? But obviously there are drawbacks to gold, right? It's not digital. It's not as easy to cross border with and things like that. But I think the currencies in EM that are just tanking, it really does help people get out of those and preserve their capital quickly.
I think that's the strongest argument for where does Bitcoin serve as an inflation hedge. And so, you know, Talos is active globally. So we have banking clients that we're talking to all over the world. And it's not a surprise that in LATAM, across Africa, Turkey, Southeast Asia, this is where there's a true need for the asset. And you are seeing those sort of true fundamental flows going into Bitcoin as a safe haven, as an inflation hedge. You know, most of us, and probably most of your viewers, grew up and have always lived in economies where there's 2% inflation. You know, anything you save, you basically keep. You know, I grew up in South Africa. My family left in the 90s. Inflation there was eroding your savings at 10, 15% every year.
Mm-hmm.
Every year you stayed in that local currency was a year that you lost purchasing power globally by 15%. You know, you put that kind of fear into someone and they very quickly understand what is Bitcoin, and to your point, what is 21 million mean?
I've got a question on that though. So if I'm in EM and I'm scared about my currency debasing, why not just park myself in a dollar stable coin? Why would I buy Bitcoin and not be in a stable coin though? Is there a reason?
Because of the cross-border ability of Bitcoin, that you can basically transfer Bitcoins across border. It
might also just be that there is some element of wanting to speculate on Bitcoin as well though, right?
Yeah.
You know, they're like saying, I don't want to own my own currency, but this thing not only protects me from being in my currency, but also gives me potential upside, right? Because I guess in those countries as well that are debasing, the economy is probably not in that great shape either, right? So the people are feeling poorer, and maybe they're saying this is an opportunity for me to not only protect myself against what's happening to my currency, but also having upside on my money, because this thing has been going up for the last 15 years consistently. So maybe it's some of that as well.
Yeah, I always say like the dollar's like the cleanest shirt in the laundry. It always makes me laugh that we get these periodic pieces from like sell side, you know, banks and what have you, talking about the dollar demise, and it normally marks the low of the dollar. Like we basically have this we have this kind of process with the dollar where and it kind of constantly repeats itself, where we have the Fed easing, doing QE and all this stuff. The rest of the world starts to reflate. The dollar starts to sell off. And I always say like the window to be short dollar against other currencies is really short. So that's when like the world's reflating, Fed are easing, and everything's great. It's massive risk on, dollars getting hit. Everyone's talking about the dollars going to zero, and all this stuff. And then the Fed whisper about we might need to tighten rates here, and then that's it. Then the dollars sort of bid for a long time, and then and as we saw, like 22, so the dollar goes through this sharp run up, and then once we get towards the end of that, we have this brief period of weakness for the dollar, where the Fed start going, right, okay, we're going to have to start cutting rates again. Dollar sells off. As soon as they start to cut, normally then everyone goes, like, right, so we sell off into that, and then the world goes, right, actually the rest of the world's in got bigger problems than the US. So then actually, even during the start of the cutting cycle, dollar strengthens again, and then it stays in this sort of strong mode, which we've kind of seen, I guess, over the last few months. Until again we get to a point of the US looks like it's slowing down, the rest of the world's catching up, and we get this kind of convergence in growth. So we kind of repeat these things, but generally, like, the window to short the dollar is quite a small one. So like the dollar probably does against other currencies quite a good job. But like you say, I think Bitcoin gives you not just, I mean, Bitcoin is obviously, but all the other currencies are still in the same game. Like, they're all still debasing. It's just like the dollar looks more stable because relative to euro, sterling, and all these currencies who are all engaging in the same games on a relative basis, they've all been pretty stable. Obviously, you see it more against emerging market currencies that are losing more control of the narrative. But obviously, Bitcoin's gone up as gold, as stocks, in those fiat terms more than anything else. But to the point about the emerging market currencies as well, and this is my thing, despite, like, I mean, we it's funny for us, right? And from South Africa, like, you'll notice, like we agonize over we got PCE out on Friday over a 0.1 miss either side, right? 0.1 lower, it's like, oh, okay, Fed can cut. 0.1 higher, it's like, oh no, they can't cut. But actually, it lends into my argument that I think there's still a level of credibility generally around Fed policy and major Western central bank policies, that you kind of not needing that inflation hedge aspect of Bitcoin, because everyone kind of still thinks that they will credibly deal with inflation. And we know that because when say with the US, when in a hiking cycle, the dollar's rallying, despite when inflation was at like nearly 10%, they're hiking, the dollar's rallying. In emerging markets, you get the other, the phenomenon's completely the flip side, whereby the central banks are hiking
to defend,
but the perception is you've lost control and you're hiking, and with every hike, the currency's just getting hit and hit and hit, because as well you're hiking, you're killing growth and all these things. So that kind of shows you where the market and those economies and central banks have lost all credibility. I still think, despite as much as I will criticize the Fed, there's still an element of credibility from a market perspective that kind of Bitcoin's not really needed, and then it trades on its other like risk type proxies. But this is where I always say Bitcoin kind of captures the towers of the risk distribution. It's a risk on proxy, and obviously when risk is flying, Bitcoin flies more. Yeah. It then captures the left tower of the risk distribution, where when it's big risk off, and we're questioning like the Fed, or we're questioning like debt sustainability in the US, and we saw that when the Middle East troubles were kicking off, and everyone was worrying about debt sustainability in the US. Yields were going higher, and actually Bitcoin started to outperform then, because then we were capturing that left tower scenario that they're losing control of the situation, and that's when Bitcoin becomes like the ultimate safe haven. So in between that, it kind of just trades with risk. And
I think your point about it leading inflation was a great one, because that certainly felt like what happened, right? In 2021's rally, Bitcoin essentially said they are printing like there's no tomorrow, and so it basically priced in the inflation early. And then when we finally got the inflation, because it was actually showing up in the CPI data, there was so much political pressure from Biden to get the Fed to hike rates. And that was kind of the trigger for that crazy hiking cycle that we saw, right? The fastest hiking cycle ever. But I think it was that political pressure to then bring that down. And like you say, Bitcoin sold off on that, because how can it not? We're going from a world where we're printing and debasing currency to suddenly we're tightening faster than ever, right? So I think it makes a lot of sense that it should lead the inflation cycle. And we know inflation tends to be a lagging indicator anyway, right? So you kind of want something that gives you a read on where inflation will be in 6 months to 12 months. And I kind of feel like that's what
Yeah.
Bitcoin's achieving.
I think as well, like we had my CEO on here last week, Stefan, and I think he made a really good point when we were talking about this like store of value arguments, and he was like, it's the qualities of Bitcoin, like the underlying qualities, like the limited supply, and stuff that make it that store of value. That over time, and the time element is quite important. Like over time, those qualities like kind of win out and play out. But short-term fluctuations in a 60, 70 vol asset, obviously, you know, we kind of get pushed around a bit. But when people say, you know, how well is it doing as an inflation hedge, and they go like gold. If you spoke to people right now, they go like gold's doing its job, right? And I'm like, yeah, but you know that Bitcoin outperformed gold like over the last year. So what's your time frame? Because yes, Bitcoin is up and down with broad risk, and gold's been steadily climbing higher. Gold's got a demand story from central banks, and
China's buying like there's no tomorrow.
Exactly, right?
But gold's story is thousands of years old.
Yeah.
Bitcoin is not even 2 decades old. And we're already comparing it to, you know, the longest inflation hedge asset ever. So I really think you need to, you know, zoom out, consider how long Bitcoin has been around, and the role that it's increasingly playing. Because people are slowly starting to understand the true properties of Bitcoin. And it's funny because we sit here and we're obsessed and we think about Bitcoin every day, and we're like, oh, obviously everybody sees it this way. But the reality is most people in the street don't have a clue, don't understand the 21 million element. And it does take understanding and studying it to realize the role that it can play. So to your point about money and value slowly flowing into Bitcoin as a monetary system, I think will only continue. I think one of the best studies I ever sort of read about Bitcoin was they took, I don't know, 10,000 people, and they said, okay, how can we predict who in here holds Bitcoin? Age, gender, level of education, level of wealth, level of income, none of that made a difference. The only significant factor was how much had this person researched about Bitcoin. So if they'd studied it, they were much more likely to hold Bitcoin.
Right.
So the opposite of that is also really interesting, which is that there's nobody that studied it that hasn't recognized its value and hasn't invested. So it's almost like this virus that's going to just keep infecting more people. And maybe that's not the right terminology. But this concept of understanding its properties leading to it being an asset, I think is, you know, probably similar to the thoughts you were discussing.
But if we zoom into what's happening over the last few months, someone could easily say, well, it's not a hedge, it's just correlated to the Nasdaq, it's just doing what stocks are doing. So what do we make about the recent decline that we've had? You know, is that true? Do you just see, or is it a regime thing? Do we have different regimes where sometimes it will act like a high correlated asset to the Nasdaq, but if you zoom out enough, there'll be periods of time where it does this kind of debasement hedge thing? What do you reckon, Dennis?
So I think in general, it's a matter of the perspective. Like if you look at it from a long time horizon, like if you zoom out, as you say, you will find your correlations, and you will find that it's decorrelating on a very short term frame. So within the last couple of weeks and months, and I mean, if you look at research papers, regression analysis on what is influencing Bitcoin prices, it's macro. Definitely has an input factor there. You have interest rates, you have sentiment. Sentiment is a big factor as well. So all these factors are having an impact on Bitcoin or the cryptocurrencies in general. And over the last weeks and months, I'm convinced that Bitcoin was heavily impacted by Trump, by the tariffs, by the policies that are about to be set in motion, that were already set in
But
motion.
that impacted stocks too, right?
Yes, so it acted as a risk asset, basically. It was traded as a risk asset in the market. We've seen this in the vol as well. I mean, vol exploded on the front end of the curve for a short term, and then it was trading very parallel to stocks, etc. And then the moment what we see now over the last few days, like basically Bitcoin finding sort of a bottom and recovering slowly, is also most likely related to a little bit of a softer stance from the trade policy side and the Fed last week, etc., where there was some sort of dovish signals coming through, and this is a clear sentiment factor also. So it's a little bit of everything.
The point about the Fed, so something that they obviously every quarter they bring out their summary of economic projections. This is probably a question for you, Dave. So they showed their growth forecast came down. Their inflation forecast, however, went up, right?
Yeah.
And their unemployment forecast went up. So they are quietly saying that we think there's a bit of a stagflationary risk here, right? So if that outcome actually does play out and we do see a bit of stagflation, weaker growth, higher inflation, do you think that's a condition where we see crypto or Bitcoin, forget the rest of the altcoin space, do we see Bitcoin outperform stocks in a stagflationary world?
That's a good question. So I think we have this, obviously, like we can't get away from the fact that there is this short term, there's this just correlation to risk and just as a risk asset. So if we see like stocks getting hit, I've got no doubt in my mind that Bitcoin will get hit with that. And again, it all depends on the underlying dynamics, and kind of what's driving. I mean, what I thought was interesting about the Fed, and I actually found I thought it was a kind of a mini like dovish pivot because December they were like super hawkish. We'd had what I think was the economy riding this sort of pre-election spending sugar high. And they kind of reacted to that. And again, if you want to talk about why has Bitcoin underperformed for last quarter, well, you've had quite a hawkish Fed, as well as a new administration coming in talking about reducing deficits. So all the kind of credible things that you want, they've been doing, and is Bitcoin just kind of gone, oh yeah, I'm not needed right now, right? So you could argue that, right? Or maybe it's just risk. But they clearly got like super hawkish right at the peak of the economy, and we're now seeing that slow down. But I thought what was quite interesting last week was they'd removed this idea that the risks were balanced, and it kind of the risks now that they're seeing are actually towards like to the downside of the economy is where the balance of risks lie. And they essentially, in my mind, alluded to that they would cut rates to address that, which Powell said before. If unemployment, started to rise, then we'd cut rates. Unbelievably, he used the word transitory again to talk about
shocked.
inflation. But I think the key thing was they've kind of priced quite an aggressive tariff scenario in their inflation forecasts, of which he said, okay, this is where we think inflation's going. However, we think that would be transitory. So essentially what they've told us, we will look through that if the downside risks to growth materialize. So we'll cut rates, and we're prepared to look through what could be higher inflation prints on the tariff stuff. So I think it was kind of a mini dovish pivot. And again, for me, it's no coincidence that Bitcoin's kind of started to pick up off the back of that. Because again, it's like, okay, actually, you might run inflation quite hot potentially because of this sort of slowing growth. Now, Bitcoin and risk was getting hit in the stagflationary scenarios when the fear is growth is going to slow, maybe recession fears, but the Fed aren't going to do anything about it because they can't because of the inflation constraint. I think reading between the lines, and the markets picked up on last week, the Fed essentially said, we'll look through inflation,
right,
and we'll be able to respond to slowing growth.
Right.
Should we get that slowdown come through? So that's why now I kind of think we're off to the races. I mean, this week we're kind of in quarter end, and I always think you get just really choppy, like because we've got portfolio rebalancing and all these things going for quarter end. It tends to be negative liquidity because you get banks window dress balance sheets, which means the RRP goes up. Now we do have an offset at the moment with the Treasury general accounts being drawn down because of this debt ceiling issue, which we've spoken about before. So they're having to spend their cash. That's at the Fed. So that's kind of positive liquidity, but usually month end and quarter ends are negative for liquidity. So we're going into that. One slight difference this month is with the rebalancing. So you get funds that have to are mandated to keep portfolios in balance. So if it's a 60-40, so if the value of their equities have fallen,
it's like the pension funds you're talking about.
Exactly. Yeah. So if the value say of their equity portfolios fallen relative to bonds, obviously you've seen bonds actually perform this quarter, equities come down. The actual rebalancing flows are sell bonds, sell some of the bonds, buy more equities. So I think equities actually do quite well this week. Liquidity net should be negative, but we're going to probably get some choppy price action. So I think next week, I'm pretty bullish that we start to respond to this, both what I think was a bit of a kind of, I call it a mini dovish pivot from the Fed. We've had kind of some softer inflation data. We've got PCE on Friday. That's going to be important. But also obviously this softening of tariff headlines. So I kind of think prepare for a little bit of chop this week, and then I mean, obviously Bitcoin is performing quite well so far, but I think it will be a choppy few days. But then I think we're going to have a better Q2 on account of the Fed and Trump's the unknown in all of this, I guess.
So the next thing I want to touch on is obviously we're saying there's quite a lot of correlation to risk assets. And the question I would pose to you guys is, do you think a lot of that is due to the institutional adoption increasing? And, whereas it might have been a slightly more decorrelated asset that made it attractive to put into portfolios to improve Sharpe ratios, to improve diversification, etc., is it a case of we're actually seeing instos come in and buying this stuff, and it just now means that when risk assets fall, they have to sell, and that reason for putting it in the portfolio is kind of being degraded now because the instos are coming in? I mean, you're in an interesting position to kind of witness the institutional adoption in real time. What do you see?
Yeah, I'd say both sides are true. So yes, institutions coming in, adding Bitcoin to the balance sheet, as you say, to the portfolio, as you say, improving Sharpe ratios. Maybe that brings its usefulness as a tool down. But again, thinking about the long-term story, Bitcoin can't be useful if its vol is so high. So I'd say a dampening of the vol probably makes it more of an effective inflation hedge. To our original point. But then on the other hand, I'd say a lot of the institutional adoption of Bitcoin is not so much of it as a trading asset, as much of it as it is just something that they can trade basis with. So
it's not taking directional exposure.
Exactly.
Right.
So my previous career was in fixed income. We used to do treasury, bund, gilt basis all day long, and nobody cares about what direction things are going in. You just want to track the difference of the price between the two. And Bitcoin is a perfect instrument to trade this. You've got a CME future. You've got spot that trades on regulated exchanges now. So
Via the ETFs.
Exactly.
Yeah.
So the vast majority, I don't know if majority is an exaggeration, but a large portion of the trading is just basis trading.
And the basis trade is what, picking up 10% annualized or something? Is
exactly.
It?
Which, when you compare to what all of these hedge funds are doing in treasuries, gilts, and bunds, is a huge pickup for effectively the same risk. It's just a funding trade, really.
Mm-hmm.
So I always find it quite funny when you see these sort of guys on Twitter talking about, oh, look at this Bitcoin short on the CME. All these guys are going to get. I mean, it's just just a basis
because
trade.
You have to trade in different venues, basically, right?
Exactly.
Right.
So Yes, Bitcoin add into portfolios improves Sharpe ratios over time. It probably brings down the vol. But
Are you seeing a load of instos lining up to get involved though? Is it a case of, we've said so many times on this show, it's still early. There's still a big wave of adoption that hasn't been seen yet. Because like you say, you had the type of players who would do basis trades. Those are like your hedge fund types that came in when the ETF got launched. But what happened to all the real money guys that were expecting to come in and allocate, into the space? Is that something that's still coming?
I think a super fair question. There's a couple of angles here. Number one is regulation. So Mika's just passed in Europe. So it's only been live for less than 3 months. Guys are coming live there. The States is only now starting to pivot towards being friendly towards crypto. So we're seeing a lot more sort of demand there for technology and to set up a system, set up trading systems. But the reality is these things take longer than we think.
Mm-hmm.
These guys are not just opening up a Deribit account on their phone and trading. So the bigger their institution, the longer it'll take.
Mm-hmm.
A lot of these guys, the risk committees meet once a quarter, every 6 months. These allocations take a long time. It takes an even longer time to get vendors approved and systems in place. So,
Okay.
little bit of patience on that front. I think the market's also, crypto's what, $3 trillion. A lot of these guys need a bigger market to allocate into.
Right.
So we've spoken to pension funds who are interested in allocating, but say the size of the ticket size that I have to do is too big for this market.
And it's going to have too much slippage, too much price impact.
Exactly. So I need to wait until it's a 5 trillion.
That's the irony of this space. Because it is still a nascent market, it's like the higher it goes, the more people come in, and therefore the higher it still goes. Right?
People are going to get stopped in.
Yeah.
Once
Whereas you look at stocks and people are like, oh, stocks are overvalued, I'm not going to buy them up here. So the higher stocks go, it doesn't necessarily suck in more capital. But because you're in a nascent market, the higher it goes, it does suck in more capital, which is the irony, right?
Yeah.
What do you think on the institutional adoption? You're obviously at a bank.
Yeah. So I think also, as Andrew mentioned, that the regulatory clarity is a major point. It's not there yet. In Switzerland, I think we're quite ahead in terms of that. But the US is like basically everyone that the regulatory body that everyone is looking at, and it's still lacking regulatory clarity from that front. So when you talk about institutional adoptions in terms of bigger banks, pension funds, insurance companies, they need to wait for a framework that allows them to invest safely and properly into this new asset class that is still very, very young.
When do you think we get the clarity? Is it 3 months out? Is it 6 months, 12 months? When do you reckon? Any idea?
Well, I think 6 months ago, I thought it's going to take 2 months. Now I think it's going to take another 2 months. You never know. We have now a government in the US that is pro crypto in general.
Yeah.
So you would expect that process to speed up. But still, there are so many other things that are happening at the same time. It's not that the government, the SEC, is just purely focusing on crypto now. There's always other topics to take care about as well. So I think, we need to have a little bit of more patience. But I'm sure we're going to get, there's a couple of good steps that we've seen now, for example. You talked about the ETFs, the ETPs. Solana just launched, or CME launched also a future-based CME launched Solana futures, and a company launched a futures-based ETF. It's like the first step towards an ETP launch later that year. So
it was like Bitto when Bitto was launched on Bitcoin, right? That was the futures ETF.
That was in 2021, I think it was. So this is always like a precursor into what's going to happen next. And then that's part of the institutional adoption also, I think, because if you read like into papers and you will see that many big institutional companies, their preferred investment vehicle are products that are listed because it's an easy investment and it is basically signed off by a regulator. So the more of these ETPs, ETFs that you have, the more likely these companies are going to jump off because they don't want to put all their cash into one asset. They want to also diversify within the crypto space.
The interesting thing I've found about these launches of these new products is they often mark short-term tops in the assets because it's kind of like sentiment gets all frothy and all excited. Look, we've launched this new product that's going to be amazing. And it's like, oh, no, what happened? But it kind of leads me on to my next point about trading sentiment. So historically, crypto has been a very sentiment-driven market, right? There's been a lot of speculative froth that builds up as people get excited about the thing going to the moon or whatever. But it feels like in the latest sort of bull cycle, we haven't really had that in Bitcoin because a lot of the retail spec has focused its efforts and energy on meme coins, whereas Bitcoin, because you've had things like the strategic reserve and the government becoming more pro-crypto, it's become like the institutional asset, not the high speculative retail asset, right? Would you say that's fair? And kind of, what do you think are the implications of that?
So I think in general, like if you're in a bull cycle, you always have the type of investor that are looking into the asset that are outperforming Bitcoin in general, because we've seen this in 2021, altcoins outperforming Bitcoin massively, and just that there is so much greed in the market. And that's just part of a bull cycle, I would say. It's similar to the equities, or people start buying these tech stock, overvalued tech stocks, because they look nice on the chart and they perform well. So meme coins or whatever, altcoins in general, in a bull market, outperforming is nothing unusual. I wouldn't say that Bitcoin is now a purely institutional trade. It is just a matter of vol also in the market. You have a lower vol asset with Bitcoin compared to the altcoins. They're still trading at like a 10, 20, 30% percentage point premium to Bitcoin.
You mean the vol?
The vol, yeah.
But I mean, look at Ethereum. Like it's the daddy of the altcoins in theory, right? It's the one that's been around the longest.
Yeah.
I mean, that chart, Bitcoin versus Ethereum, that chart looks horrible, right? So clearly there's a divergence here where, and my question is it because the investor base is splitting basically? Is it like you've got the speculative retail and even speculative instos going after these potential higher vol, further out the risk curve assets, which are actually not making them any money. And then you've got Bitcoin dominance slowly rising as like the safer, sticky, long-term money comes into that. Like, for example, the long-term holder base that you see with the on-chain data in Bitcoin. I mean, that's near the highs, I believe, still, right?
Yeah.
So is that what we're seeing? Are we seeing this dichotomy between Bitcoin and everything else?
I think it's a use case issue as well. So, 6, 7, 8 years ago, the use case of blockchain was, we're going to put everything on the blockchain. The land registry is going to go on the blockchain. Everyone's marriage certificate's going to be on the blockchain. And the reality is we've just not seen that level of true use case adoption come into the space. You've got clear use case is Bitcoin with store of value. It's stable coins for cross-border payments. And then it's most of the rest of the industries is probably, okay, then there's Ethereum with maybe real world assets, but those still haven't really come into play properly. There are some great products, like Brickell, that have gotten huge AUM attracted already, but it's not infiltrated into day-to-day life yet. So I think this is why Bitcoin dominance is trickling up, because the rest of the space hasn't really found a true
The
use
killer
case.
app, right?
Yeah. So you've got all of these meme coins, and the reason we've not had an alt season, let's say, versus previously, is because there's now like 3 million meme coins. So all of that money that wants to gamble, let's say, is now spread across so many more assets than there were previously.
Right.
So I think that's, until we get that killer use case, I think BTC dominance probably continues to tick up.
It's also the only asset or the asset that has been most debated, like in media. If it's about crypto, it's Bitcoin. Or in Ethereum, I feel now has moved into like a little bit of a middle zone. Like it's still considered an altcoin because it's not Bitcoin, but is it really an altcoin? Because if you look at altcoins, they are trading at a substantially higher vol. They are used for mainly leveraged positions. And Ethereum is like in the middle somewhere between, where it's not really comfortable for institutions. It's not an asset that has like the credibility of Bitcoin, but it's still enough to not be considered a meme coin, etc. So, but it's in a difficult position, I would say, at the moment.
Yeah.
Ethereum needs a Michael Saylor to come in and buy a few billion every month, I think, right?
That would help.
Because banks are, so my immediate role just before Talos was at Santander, and we issued a digital bond. So for me, that was a point at which I was like, wow, okay, I need to get into crypto somehow. Clearly, this is the future. It's taking over. But every time there's been a bond issued on the blockchain and they use Ethereum, so far to date, it's still just been a proof of concept. And I think Ethereum's stuck in that space that it has legitimacy. It's in the conversations where it needs to be, but it hasn't evolved really and truly beyond a proof of concept sort of asset at the moment, which is why I think it's struggling here.
Yeah, I think as well, like ETH's got, obviously like the impact of layer twos in terms of like reducing like base fees and things like that on ETH have had an impact. I mean, it's now we spoke before about going from being deflationary and because of that lack of activity directly on the chain, we're now kind of inflationary. I still think as well, like being the macro geek, I still think the fact that we, ETH started to do perform, and then Fed turned hawkish again. So it's kind of yields as with Trump and everything coming in, yields popped higher. So which makes DeFi less attractive, and the yields available in DeFi are less attractive. So I think there's some issues like that as well. Obviously Solana was like the darling, and I mean that's been hit probably with the Trump meme coin coming.
But that's very sentiment driven, right?
Yeah, that's very sentiment driven. Yeah, but like I mean, it's funny to me. What Fidelity the other day announced that they're going to issue a Biddle type competitor money market fund dollar yield bearing coin on Ethereum, and we kind of we just blink. So it's just it's out of favor. Joe, things like when I look at sort of what's being built, because it's still the dominant chain where things have been built on, it reminds me a little bit of like .com, and you had all the .com 2000, all the .com companies got smashed. In the same way, like all the alts haven't really recovered, right? Hence, Bitcoin dominance is keeps rising. But it reminds me of Jeff Bezos with Amazon, and like he said, stock got hit down 90%, and he had investors. Everyone comes to him like, why is the stock not recovering? And he was like, every metric of his business that he was looking at was improving. It was just the stock was just sentiment, and everything was in the gutter still, and the stock wasn't, and the narrative wasn't there recovering. But he's like, when he was looking at his business internally, everything was going up. And then eventually it called up, and I think that with ETH, like it's still, ETH, you got this Bitcoin dominance, which probably is the institutional story is still big on that, and that's where the money's coming in. And then like with all, everyone will start to move a little bit out of the risk curve. ETH will be the next one, that we've already got the ETFs there. So ETH will be the next one that money starts to flow into. So I think it will like have its time, but I mean, I've been wrong on this one for a while. I've been expecting it to take off, but I still think the Fed are going to cut rates far more aggressively than was priced. I think that, and as yields come lower, Bessent wants lower yields, Trump wants lower yields. As we get that, DeFi activity kicks off a bit more, and everyone's searching for yield again. And then ETH will do just fine.
ETH volatility's kind of established itself at a good 10 to 15 vols over Bitcoin for a while now.
Yeah.
So and clearly it's had a much higher beta on the way down. Like it's since the start of February, it's underperformed Bitcoin by 25%, right? So, I mean, we are waiting to see if it's got some beta to the upside or not. Remains to be seen. But a question for Dennis. With all these instos supposedly coming in, and obviously we still think there's tons of instos to come in, but do you see, how are they using options within the space? Like, is it a case of people are allocating into Bitcoin and using options to layer hedges over the top of that? Is that a big thing? Is there any real size or volume in those trades? Or are people actually more not ready to just commit a load of capital in the space and rather buying long-term calls? Because from what I'm seeing in the vol surface, call skew is so damn persistent in 6 months and longer maturities. It just never goes. So anytime we dip lower and it looks like, oh my God, we could be crashing here, long-term skew is still very much in call premium. It's only put skew in the front end that catches a bid. So I was wondering, do you have any insight into like what the instos are doing in options and what's driving that?
Yeah, sure. I mean, you talked about the skew, and what we've been seeing lately is that some of our clients in Switzerland were moving into longer dated short puts now. Because just of that short-term bearishness or modest bearishness in the market that is also reflected in the skew. You talked about the put skew on the front end, which is then slightly or turning slowly into a call skew up from 1 month, I think, and going forward and slowly picking up. So they've been, we've seen like these put sellers in
sort of maturities.
This I would say into three months,
Okay.
3 months and around these expiries. And that just indicates basically that they're a little bit hesitant in terms of how low can Bitcoin or Ethereum or the coins go actually further down from here, because it's still quite uncertain at the moment, the sentiment, particularly on the front end.
Mm-hmm. So that's an alternative to just buying the asset here, basically saying, I'm not ready to buy it here at 85K, but if it goes to 60K, I don't mind getting delivered some.
Yeah.
Right?
Exactly. Yeah.
Okay.
Yeah. So that's the story behind it. And then we have clients in Switzerland that are rather holding on to their coins, but are still willing to sell some shorter dated calls over it. At the moment, I think it's still, even though skew doesn't work in that favor in terms of call skew, but it's still at the moment on like a shorter dated, let's say up to 2-3 weeks, selling calls, out of the money calls. It seems to be the safer bet than going longer dated at the moment, because it's just the pop up or just the breakout of the spot market here to the top side, and then we're going very quick back to the previous highs. So there's a risk of selling longer dated calls at the moment, I would say.
Okay, it's quite interesting. You're pretty much telling me that the differential in skew between the front and the back end, rather than it being driven by put demand in the front and call demand in the back, you're basically saying it's because there's more supply of calls in the front and there's more supply of puts in the back, basically, right? Well, it sounds like what you're saying.
I mean, that's the supply that I'm seeing on my desk.
So you're seeing a lot of vol sellers. So you probably see a lot of vol sellers in general.
Vol selling in general is like something that our clients in Switzerland are
they love to do.
You vol guys are always selling. You're always selling vol.
I love selling a bit. Well, I remember when we had Marty on the show back a while ages ago. He says vol is for selling. That was a quote for Marty. If you're listening. All right, guys. I think that's been a really good discussion. I don't know if I can walk away with it though, with a clear picture of whether Bitcoin's an inflation hedge or not. But I think my takeaway would be, if you zoom out, as a longer term monetary debasement hedge, it's still very much valid. But you do get these sort of pockets of time where correlations go up and the market is fearful over some sort of macro risk. And that's a period that we just went through, and we are kind of working through that now. And, the question is, are we going to see another low? I guess, and in closing, do you think the low is in for this year? Or do you think we get one more low before we really get going on the bull market again?
I think the low is in. I think the low is in, but I will have a caveat to that. I think the next big risk for the market is when the debt ceiling gets lifted. Then they'll have to rebuild the TGA, and that's going to drain a lot of liquidity from the market. And that's a potential risk. However, like the Fed obviously last week slowed QT because they're cognizant of the fact that the impacts that this debt ceiling is going to have on liquidity levels and reserve levels in the banking system. So there's a chance that they get ahead of it a little bit because they've seen it before play out in 2019 when we had that repo blow up in the funding crisis. And then they implemented measures then to deal with that, what I call a not QE, where they were buying bills basically in the front end to supply liquidity into the front end. So they know what they need to do when it happens. It's just will they let the market blow up first before they act, or will they get ahead of it? I kind of think they might get ahead of it. So I think that's one risk for the market, and I don't know how far out before we get the debt ceiling lifted. With that aside, I kind of feel like Trump's come in, he's front loaded all the bad news. So I think the news flow gets a little bit easier. I still think we're in this rate cutting cycle. We've also got the lags from, we had the dollar rally and yields higher on the knee-jerk Trump reaction. Yields have come quite a bit lower. Dollar's come a lot lower, and I still think goes lower still. And Bess and Trump want that. And that should start to feed in to easing financial conditions and what have you. So I think that cycle turns, which risk I think is going to perform really well throughout the rest of the year. So yeah, I think the lows are in. We might have another wobble when the debt ceiling gets lifted.
But you guys,
and when I'm hearing all these valid points, I just have to say we're seeing another dip in the market, because it's usually you have all these valid points that make sense, and then it always turns out the opposite direction.
So you think we see another low?
I wouldn't be surprised if we see another 70, lower 70s.
72 is the big one, isn't it?
Yeah.
What about you, Andrew?
I'm a bad person to ask. I always think the low's in. I'm a perma bull, so
You're a perma bull.
I'll take the other side of the conservative Swiss.
All right, looks like we've got 2-1. I'm not going to vote.
What I will say is it does remind, I've said before, it reminds me of last August when we had like we'll talk about the funding carry trade unwind. Stocks got hit, Bitcoin got hit, and we had been pushing that 70K level, never quite broke it. And then we came back, and then we had around the 4th, 5th of August when everything dumped. I think Bitcoin went like 49K-ish. And then everyone was talking about 45K and a return to 45K. And then the next thing we broke. So I kind of think like 100K's new 70K, like these 70, 75K's like the new 40, 45K. And then we might not see it. And then everyone's FOMOing in, having to chase it higher.
I'm on board with that.
All right. Well, look, I'll say I think the low probably is in, but if it's not, I'm happy because I'll be able to buy some in the low 70s. All right, we're going to leave it there for today's episode, guys. Remember to like and subscribe to the channel. Hope you enjoyed the show, and we'll catch you back here next week.